Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 18th of September, 2018, and the time about 4:17 p.m. Central Daylight Time. What a surprise day. The stock market roars to the upside. These are rather dramatic ranges. If you take a look, you have a 300-point range in the Dow. You take a look at the size range. You've got a 140-point range in the NASDAQ. If you look at the dollar index, all the way down from 94.32 to 93.88 and then back up. These are not small little moves. And obviously the tariffs had an awful lot to play with it. The market completely discounted that, went on its own way, even after China said that there's tit for tat here, and the market's saying, you know, the way these two guys are going at it, they're throwing blows, but they're not throwing knockout punches, and they're not going to. They want to hurt each other to the point where they can get to a table maybe after midterm elections, is the thought, and sit down and negotiate a deal. In front of the midterms, my guess is China wants a free bite of the apple. Let's see how the president does in front of then. Yeah, maybe they'll send a lower-level minister to talk with our lower-level ministers, but that's to keep channels open. I'm giving you a guess. In the gold market, what you're seeing now on the weekly chart especially is a market that has just stalled out. It's just sitting here against the 1200 level, not going one way or the other. You see that very clearly on the charts, and no, it's a hard market to figure out right here which way to go. I have put together, by the way, my gold report, so stay tuned. I'll tell you about that. My subscribers will get it tonight. Tomorrow, other people can get it. So I'm not going to put it out right now for the general public, my subscribers first, but I've included lots of charts. Our price counts, seasonal charts, daily charts. I've given you the trade lines that I'm seeing on the market, the sideways action, the Bollinger Bands, and the seasonals. A lot in this report. As you can see, the market's stuck right here. The pattern temporarily is one of higher lows and higher highs. I use the word temporarily because if you take out 1197.50, you can go the opposite. You could have lower highs, lower lows very easily. But look where all this action has been happening. That 18-day moving average of closes, that's what I call MAC. Markets typically get to that number, and when they start going sideways against it, what happens is you compress volatility. As you compress the volatility, the Bollinger Bands start narrowing in, and that's what you're doing right here. From that compression, it's almost like you're building inside of a pipe. Pressure, it's going to burst one way or the other. I often look to see if slow stochastics are giving you an indication. They are pointing down. So right now you have a mixed market. You have the swing line up. You have bias down because you're under the 18-day average, and slow stochastics are pointing down. Support is 1193.70, the last break low. I still think that the key to the market is not to take out 1189.50. Now, I'll explain why in my report. You'll see why I come up with that. When you come to GLD, the ETF, it's identical. You're fighting at the 18-day moving average of closes, narrow price action. The trend has got higher lows, higher highs, but here too you closed under the 18-day average, momentum pointing down. If you were to take out 112.91, what happens is you break through that important low, and let's see if I can bring that right here for you. And then maybe you set up a challenge at the lower band. If you take out the high here that you made yesterday, which was the 114.03 level, well, that will set up the potential for a move to the upper band at 114.60. What's important is the way this ultimately breaks out and stays out is probably the next trend of the market. GDX is suddenly the miners back in vogue. Higher lows, higher highs. The trend is up. You closed over the 18-day average. I don't recall the last time I could say that other than back in July. Now, that doesn't mean the first close over it's going to run, but You have the trend up, the bias up because you're over that, and momentum up. Until the market gets back under 1792, the potential is there for a challenge of the upper Bollinger Band. The gold-silver ratio is absolutely stuck in no man's land, just hanging right here. Not breaking, not rallying, just going sideways. And with it, the silver market still has a pattern of higher lows and higher highs. It is still an oversold territory. If it decides to rally, I would look for the 18-day average of closes at 1442 to be the resistance. Should it break through 1406.50, I would look for the 1382.5 zone, the lower Bollinger Band, to be support. A market that had a rock and roll traders last night was this market, copper. Gets down to 258.80, takes out the previous break low of 259.35, and then decides to start a rally, a monster of a rally. If you look from the low to the high, it's about 16 cents. That's dramatic in copper prices. It's about $3,000 in real numbers, just to give you an idea. Momentum is up, the bias is up. You don't have a swing line, and you're caught in these Bollinger Bands that are sideways, and I think I have been pointing that out to you regularly here. This market seems to be caught also, like the gold and the silver, in that action. What's not caught in the action is platinum. It's trying to break out to the upside. Would you have thought with the tariff news that platinum and palladium are going to be strong or they were going to be weak? Ask yourself that question. Yet here they are at the upper Bollinger Band. Yes, it is overbought. The question is, does the market get legs here? Does it fail against this number? That's going to be a real important day in there tomorrow. And finally, back up to the upper Bollinger Band in what I have been telling you is the strongest of the metals, which is the palladium, with this embedded reading. And there you go again. This is where I think the pros are taking money off the table. So while everybody might jump in, I'm telling you, I see the pros doing the opposite on that, just because you're up to the upper Bollinger Band. And in the dollar index, while you fell, you tell me the number you went against today. You got to 93.88, the lower band. The lower, the 100-day average was 93.82 in an oversold condition, and you bounced away from it. No, you have not turned the trend, but while the trend is down and the bias is down, you're oversold as can be against a strong support area. As I said in my gold report, I have really covered a lot in this report. I spent literally the whole day writing it, and I haven't done one since June. So this gives you an idea that I think we're narrowing into a time frame that's real important. To get the report, if you're not on my mailing list, the only way you're going to get it is give us a call. Go to our website at www.iraepstein.com. You can sign up for it there as well, and that will serve you how you're going to get it. For the general public, it will go out tomorrow. So if you want a hands-on tonight, be sure you sign up for everything. We'll make sure it gets there to you. Again, go to our website. You can call my staff or you can click up here. It's a pretty in-depth report. I think you'll like what you see. Have a good night.